Not all houses are created equal. Let's break down exactly what you should be looking for to maximize your returns. Let's start with the type of property, which could be multiple different things, but I'm going to break this down. Houses. Just buy houses. There you go, video done. Well, it's not quite houses that we're focusing on, it's freehold versus leasehold. Let me explain the difference in simple terms. Freehold means you own the land that the property is on, and technically the air, but the main thing is the land. So you own the house and the land, really big deal. Leasehold is you own the property as such, the bricks, the mortar, the square, the floor plan, but not the ground that it's on. Hence why with a leasehold property, typically a flat, you will pay ground rent. And that ground rent is going to the real landlord, who is the freeholder, the person that owns the land. Now the reason this is really important is people go, you don't technically own the property. Well, they are full of shit. You do own the property, it's just you don't own the land that it's on. And so say you've got a flat in London that's got a 125-year lease, pretty standard by the way. What happens when it gets to the end of that 125 years? Well, you have to pay to extend it, which sometimes is up to 70% of the value of the property. What? Imagine you've got £1 million flat, 2-bed flat in London, you run it all the way down to 5 years left and you go, yeah, it's going to cost you 700,000 in cash to extend it, which is why people end up selling with short leases because they just can't afford to make it happen, right? It's a huge cost. So for me, why would I, when most of the UK is freehold properties, especially outside of city centres, why would I bother buying a leasehold property? So buy freehold, which almost always is going to be a house. Great, a house, Jamie. That's a really good video, isn't it? Narrowing it down to 80% of the stock available. What house though? Well, this is where we need to look at short-term versus long-term investments. So a short-term investment, really it's not about the house at all, it's about the area. So is long-term really, but the short-term is how can I make money? Well, you can make money from a flat, a terrace house, a detached property, a block of apartments. It's really about the price that you're getting it for versus the end value that you're going to sell it for, right? I want to talk about long-term investment. Almost every single intellectual, smart investor is focused on 10, 15, 20-year returns, not how much money am I getting back in their first year, whilst it is also an important indicator. So if I'm focused on the long term, which type of properties get the best return? I'm just going to tell you right now, it is semi-detached properties and terrace properties, 2 to 4 bedrooms. Now, why is this? Because we want to work around the median of an area. What the fuck does that mean? Well, the median price in the UK, give or take, it really is, depending on the stats that you go for, is around 300,000. So if you can buy a property in an average area of the UK to that median price between 250 and 300,000, that's a real nice sweet spot. It's what we call the trunk of the tree. Trunk of the tree is strong, it's getting the most nutrients, and when the wind fucking hits, recession, if something's going to survive on that tree, it's going to be the trunk, not the branches at the top, the £1 million houses, not the weeds, the 60 grand houses, the trunk of the tree. So what you need to look for is the median in your area, which, say in my area, it's about 170,000. So anything between 130 and 170 is the absolute trunk of the tree. 2 to 4 beds, because I want to attract longer term tenants, or a better way to think about it is longer term customers. Who's my end customer? Well, 2 to 4 bed is somebody that's downsizing, somebody that's finding their permanent home, a first-time buyer, and somebody that's upgrading the home. So it really gets all of the customer types in the market, both from a buying perspective, which is really important for capital growth, more on that later, but also from a tenant perspective. I want a family or prospective family to move into my house, making it their home, which, in short, creates great commodity and value to them and money in my pocket. What other things are really important? We know we're going for 2 to 4 bed. We know we're going for terrace and semi-detached. What other amenities can increase the value or perception of value of your property? The garden. The garden is a really big one. Now, does the property need a garden? And this is really important. It's very dependent on the area. And this is where like the micro parts really come in. Like a YouTube video, I could say something generic and go, every investment must have a garden. It's like, no, that's just not fucking true, right? So for example, in Leeds and surrounding areas, a lot of properties are back-to-backs. So if you're down south, you may not have experienced back-to-back properties outside of central London, whereas up north, it's very normal for a house to have no back garden at all and they have a small front garden, and that's a communal space. So it is very area dependent. Why is a garden important? Well, actually, it doesn't increase the value of the property as such. It increases the demand per supply. And supply versus demand is basic economics, all right? If I have a bottle of water and there's only one person that wants it, then how much they pay for it is going to be dependent on the level of their need and their pockets, how much money they've got. Whereas if there's 5 people that want this bottle of water, there's going to create a bit of demand. So yes, from a price point of view, this means that I should receive more money for the property. Honestly, more important for me is the quality. Okay, some people call it covenant strength, the strength of the individual. How high of a quality person is it? So let's face it, if I've got a single person with a low income, or I've got a family with high income and they've got plenty of spare money, that is likely, from a purely financial point of view, going to be a better prospective tenant. So it's not just about the money, it's about how much demand there is for the property. So when we're looking at this, and the team hate it when I use big words, don't you?
Yes.
But I'm going to use them anyway. So you've got quantitative data and qualitative data. And when you're analysing property, it's easy just to focus on the quantitative data, the numbers, but actually it's having street smarts with property, the qualitative data, like who am I looking to attract? And that's what I really want to be focusing on. Now you might be thinking, okay, that's great, what else? Well, actually, almost everything else is outside of the properties, and these are the economics of the area. So for example, I'll give you some baseline economics that are specific to the UK, but I'm sure is across most of the Western world. Well, first of all, a lot more jobs are either hybrid or remote, which means people can work for London, Chicago even, and not live in those areas. And what we're finding a lot of is a movement up north, and Leeds seems to be the king of the north right now, where people are investing heavily. So you've got people like Channel 4 have moved their entire HQ from London to Leeds, which pushes up so much in the local economy. More jobs, more money to spend, more ecosystem spend going on, which then develops industry, etc., etc. Kind of obvious, right? The trickle-down effect, the chaos theory, the butterfly effect, i.e. more people that are working in the economy, the more money that we should all make. Disposable income, good news for all of us. So we got the macroeconomics there. You've also got the price disparity, the north versus south. Southern investments, they just don't work anymore from a long-term point of view. Yes, you've got these fad strategies where like serviced accommodation, HMOs to a certain extent, which they're just not as good as you think. They're really not, and I'll do a separate video on the economics of HMOs. But buy-to-lets, they're just not really working for the average investor. Yes, if you've got £1 million, you want to plow it in cash, investing in London might be the way to go, but I doubt it. Whereas up north, for 150,000, that's not even in cash, by the way, your 150 grand all in, you could buy a ridiculous house. In fact, the average property from a cash point of view, we're putting 60,000 per property and starting to build people's portfolios up here. So the reason why that's so important is when you've got that level of price disparity, the wealth from down south, in order to live there, you can imagine they need to be paid a lot more. But a lot of the wealth distribution is happening in northern city centres. So Nottingham, Manchester, Liverpool, and a majority of which is happening in Leeds right now. Over 50% of wealth distribution is happening in Leeds and surrounding areas. So it's huge economics. The next thing is focus on the customer. Genuinely, I'm not one of these people that think the customer is always right. We have some twats, by the way. You might fucking be one of them. No, customer's not always right, but you do need to be customer centric. And as a buy-to-let landlord, it's really important to remember you're not living there. So don't look for the type of house that you're going to live in. You own your own house more than likely, and you're looking to invest. Really important to have that sort of disparity. But also think about being the customer. If you were in the mind of that tenant, what things would I like to see? Well, a lot of people that are renting may, not saying they do or don't, but may not have a car. Okay, if that is the case, but they're still working, more than likely, where's the buses? How often do they come? How far from a walk is it? What about hospitals? What about schools? So we're looking for example, schools with good or outstanding on Ofsted. We're looking for bus stops, maybe a train station, maybe a local Asda that's going to be down the road. Like, could they live in this house and become comfortable and theoretically make it their home? Because there's a lot of bricks and mortar around. Doesn't mean they're great long-term investments. And a good investment in time from your customer / tenant is a good investment in money from you. 3 more things I like to look for. Maintenance. Number 1, low maintenance. I'm going to talk for myself rather than talking for other people. I am fucking useless at home. Like, honestly, I am absolutely useless. The last thing I want to be doing is cutting my grass every week. Now, I know some of you green-fingered weirdos out there, yeah, I'm talking to you, love doing it every single week. For me, I just want it really simple. And yeah, I'm one of these really annoying people that have like the AstroTurf, fake grass. I've got a little flower bed. Very minimalist house for me, really do. And I think the same for my tenants. I want to make it as simple and manageable as possible. And honestly, I'm not saying it is, but I want a nice space, and I want to assume the tenant is going to be just incredibly lazy with upkeep. I am not saying, before I get some hate on this from tenants, I'm not saying they're lazy individuals, but I want to create an environment for a lazy person. And the reason why is because if they don't uphold the maintenance, guess who is liable? Fucking me. All right? So I want it simple, minimalistic, a nice house they can make a home. Second thing, parking availability. This does not mean a drive. Most rental properties in our areas, they will not have drives. But is there plenty of on-road parking, for example? You will be shocked at the turnaround of tenants that you have. Not attracting a tenant, but the turnaround every like 6, 7, 8 months. If there's no parking nowhere near, double yellows everywhere, it creates a friggin' nightmare. Look out for it. It really is important. Just want to reiterate, this doesn't mean a garage. It doesn't mean a drive. It doesn't mean a drop curve at the front. It just means parking within 5 minutes of the property, 5 minutes walk of the property, really important. Finally, really simple one, layout. Keep it fucking boring. Boring, vanilla, buy-to-let properties. I don't want a triangular property. Oh, it's a lovely additional space and we've got like this weird like low ceiling. No, I just want a square, rectangular, boring, vanilla buy-to-let. I want to be looking at a house and going, that looks like every other house that you might buy. Good. Regularity, people seek it and people want to stay there longer. I know it's weird, but seriously, keep things simple. All of this works out to these outputs. Tenant demand will be a lot higher. We currently have double-digit tenants registering per property that we have online with our in-house letting agent right now. Resale potential. I'm always looking at the end. Now, by the way, my exit is death. And people laugh at that. I'm being serious. I do not intend on selling any of my portfolio. Why would I? That's not how you get rich. The values go up over time and you increase your debt against the value of the properties. Guess what? It's tax-free. You reinvest it, tax-free. You receive more money, tax-free, and you make a fuckload of money. But I also want to think about the resale value and the demand in there. Why is that, Jamie? If you're not going to sell it, why do you care about the potential of resale value? Well, if there's 20 houses on the street, and let's assume that I'm not the mogul that owns all 20, let's assume I own 5 of them on that street, but the demand for purchase is so high. Well, what happens when one of the 15 comes up for sale? Am I going to try and get it? Yes. Will I get it? Probably not, because I want to pay less than the open market value that they're going to get it at, right? Somebody that wants it to be their home will always pay higher. But if the value of those properties go up, there's 15, then there's 14, then there's 13. Because the demand is so high, the value of those go up. You don't need to sell your property for the value to go up. A Rick surveyor goes out 5 years from now, revalues the property. Oh my God, over 5 years, it's gone up 40%. We'll now actually give you this level of money against the property, tax-free income, going on and on. Number 3, balanced returns. This is really important. I think it was Warren Buffett that said this. Rule number 1 of investing is don't lose money. Rule number 2, do not forget rule number 1. And it's really powerful that, let me give you an example. If I lose 50%, let's say I've got 100,000. If I lose 50%, I've now got 50 grand. Well, what return do I need to get back to 100 grand? It's not 50%, it's 100% growth. For every pound you lose, or 1% you lose, you need to get 2% up. For example, if I lose 50%, I need to get 100% growth. It's really important that we go for long-term, stable, secure returns. I'm not going to name the company, but like social housing's been a really big thing, and let's rent to social housing. And I'm continuously telling people, please look at it for what it is. It is a scam. It is a Ponzi scheme. Caveat, I'm not saying social housing is. It's an incredibly powerful thing. I'm talking about a lot of the rent to social housing models. Please be careful. If something's too good to be true, it probably is in the world of investment. Slow, steady, get rich slow mentality, but get rich for guarantee. Next is scalability. I want property to be a bit of a sausage factory, and I know that usually has a bit of a negative connotation, but building wealth is about repeatability. And you can't have scalability without repeatability. And so this is why I go for my criteria, which we've acronymed as TARGET, T-A-R-G-E-T. Target criteria, every single property that we buy and we source for our investors, and I am our company's biggest investor, we follow the same criteria because it's repeatable and it's scalable. Okay, I think it's such a stupid investment philosophy to go, let's start hunting for diamonds. And it's so rare, it's so stupid. Yes, you can find a diamond, but investing gold, it's got long-term, sustainable. And so I'm looking for the gold of property, which is boring, vanilla, buy-to-let, 2 to 4 bed, terrace, semi-detached, freehold houses that's going to have a great customer demand. Now, it's all easy talking about the theory of this, isn't it? Like that, yeah, 2 to 4 bed, blah, blah, blah. What is a great price? What's the microeconomics? And we can talk about this on a video in a grand scale, but how do you actually get it down? And that's how I'd like to help you. So my main company, Aspire Portfolio, we help investors like me, like you, scale portfolios. The average, or the minimum amount I should say, is about 55 grand per property. That doesn't come to me, that's for your deposit and everything like that. If you're watching this and you want to scale your buy-to-let portfolio, you want to start building your wealth, and you've got 100 grand plus, and you need help scaling it up. So if you want to have a chat with the team, and it's no obligation, but we want to help you build this portfolio, give you some information, and really start building that wealth so you can stop working hard for your money at some point, put APG in the comments. Just as one thing, APG, it stands for Aspire Property Group. I'm going to send you a link and you can book in a completely free strategy session with one of the team, where you're at, what funds you've got, where you want to get to, and if we can help you scale that portfolio. So when you're looking at a lot of these things, often it's about getting it right from the beginning. Now, finding the right property is really important, and if there's one message to take away, boring. Keep it as boring and repeatable as possible. But remember, finding the opportunity is the first step. It's then getting it through legals, finance, refurbishment, and finding the world-class letting agency, a management agency that can do it. And by the way, you can absolutely do this on your own. Watch the videos, enjoy it, embrace it. Hopefully you get enough education where you can take some action from this. But there'll be a lot of you that actually are really busy in your own lives. You've been thinking about it for a while. You finally got to this year and thought, let's take some action. And that's what I'd like to support you with. So no hard pitch whatsoever. I hope you got value from this video. Let's have a chat. The worst case scenario is you get some value to move forward and implement. Best case scenario for me, we start working together and we'll both start making some money. Put APG in the comments. I hope you got value from this video. If you did and you're new to the channel, make sure to hit subscribe. Otherwise, destroy that like button, and I'll see you in the next video.